All right, we're going to let some folks pile in here a bit. Get the music going. Welcome, welcome. Well, that just shot up to 7 people and counting. Awesome. Hope you guys are enjoying your day. It is a sunny 74 degrees here in Arizona. I'm just going to
I'm in Utah. It's 39 and snowy. So thanks, Andrew.
Is it cloudy outside over there?
Yeah, it's like drizzle snow. So anyone in Utah is very jealous right now.
I'm sorry to hear that. Well, that's okay. When we're baking in July, we're all going to wish we lived in Utah. Thanks for coming. If you're showing up here, please post your name and where you're from or where you hail as home. We want to know where you're at. Turning down some music. Thank you for jumping in today. This is an exciting time. We're pumped about this deal. And again, I just wanted to remind you, if you could please post your name and where you're at. We want to know what's going on, what you're up to, and where you're stationed. I did speak with some of you yesterday. Thanks for joining. Thanks for jumping on. This is an incredible opportunity that we're probably going to talk about for the next couple of weeks. So this won't be the only time that we discuss it. Obviously, this is a property just north of Austin, Texas. You guys know Austin's now where Joe Rogan and Elon Musk and probably a lot of other smart entrepreneurs are moving to. It seems Texas is the new frontier for business, and we've noticed this. We see a resurgence, or we see a ton of people moving there, and they need housing. And that's why we're in business. So pretty excited to share this opportunity with y'all. And again, if you are viewing this, whether it be live or recorded, just know that we do work with an SEC attorney. We do have real estate attorneys, and any hyperbole or exaggeration does need to be carefully inspected. We vet hundreds and hundreds and hundreds of deals every single month, only to bring you the best. So be aware. I'm Andrew LeBaron. You know me by now, and if you don't, let's hop on a call soon. Let's chat. I'm always picking up the phone, talking to new people that want to jump into our deals. I've been in real estate for about 10 years now, and have over 150 flips in my history, residential, multifamily. We're on our 5th project right now for the motel to apartment conversion concept. I shouldn't say concept, it's our business. It's what we do now. It's all we do. And my business partner is here live with us is Jacob. He is just the brains of the business. He's awesome. I give you a lot of flowers, Jacob, but truthfully, he keeps us all together. Jacob and I met in the mission field. We served a mission for our church some years ago, and now we work together. And our 3rd partner is, last but not least, Richard Wilson. He's the president and CEO of Family Office Club. He will be at the conference that we're attending in Beverly Hills in a couple weeks. And Jacob is actually speaking there. So if you're going to Beverly Hills to network with some pretty big capital partners and or operators, you're going to see Jacob talk. So it'll be great.
Awesome. Thank you. And Andrew is definitely the brains as well. Can't sell yourself short there, Andrew.
Thanks, man.
So just to remind everybody what we do, and our name kind of speaks for itself, we acquire hotels and motels in areas that need additional housing, and we convert them into apartments. That's our thesis. And we want to show you a quick video of a recent project that we're just wrapping up right now in McAllen, Texas. It is renovated, and we're in the process of leasing up and targeting a payout to investors next quarter for cash flows. So let's watch this video.
I'm Andrew LeBaron of Motel to Apartment Conversions, and we are here in beautiful McAllen, Texas, wrapping up 29 motel to apartment conversions. This place used to be totally different. We took 29 motel rooms that were dated. Remember, these were built in the 50s, and we turned them around. We gutted these down to the studs. We replaced the electrical. We replaced the plumbing. We even added gas lines. And now we have a beautiful 29-unit multifamily asset. We were able to buy this property with very little down. We paid $0 monthly, 0% interest, and we took all that cash that we saved and we were able to put it right back into the property, and we called it Studios on 4th. So bear with me, there's a lot that we're packaging into this one offer for the resident. In this motel to apartment conversion, we have sewer, water, trash, electric, internet, washer, dryer, dishwasher, microwave, oven, stove, all included for just one monthly fee. If you missed out on this opportunity, that's okay. We have plenty more in the pipeline. So just make sure to follow us at motelstoapartments.com. I always get
Never
pumped
gets
every
old.
time I watch that. I know.
Never gets old.
I bob my head a little bit. You guys will notice that. By the way, all those views on YouTube, they're probably mostly mine. So fun. We have a great team, by the way. Our video team, our editing team, our just back office team as well. Thank you, everyone who helped us put it together. Oh, this deal is so fun. This was originally a Hilton hotel. Early 80s Hilton. Oh man, I think 83 or 84. I need to check, but this is a solid concrete build, just a beautiful deal. And we are locking this in at $25,000 a door, which is unheard of, especially north of Austin. All in rehab price is going to be close to $55K. Purchase and rehab, and then the exit is a conservative 95. That's actually under market, by the way. We're not being pie in the sky. We're being very conservative, and even at that, we're at an 18 plus investor IRR. So pretty exciting. We're above the 1.5 equity multiple threshold, and this is quick. We're in and out. We're refinancing in 36 months. Target sell 60 months or less. The area is great. I don't know if you've seen, if you are familiar with Killeen, you could raise your hand in the comments or post below, just wherever you're at. Just let us know if you are familiar with Killeen. If not, let me tell you a little bit about it. There is a very famous military base there. There's a hospital nearby, large hospital nearby. They're supposedly, I heard they're building either another one or an addition to the existing hospital due to the traffic and due to the need. And it's got it all. HEB, Walmart, Home Depot, and it's growing. A lot of retailers are moving into this area. This is the Temple, Waco, Austin area. If you're familiar with Chip and Joanna Gaines, they're from Waco. So not too far away, about 50 minutes away from this location.
Yep. And so just to piggyback off that, the Killeen Temple Fort Hood MSA, population almost 500,000. And it's 1 hour from Waco and Austin. And as North Austin continues to grow and get oversaturated, overpopulated, Killeen's actually becoming a commuter town to North Austin. And so there are people who live in Killeen driving to Austin for work. You look at Killeen itself, it's had an 88% growth since the year 2000. So it's at 163,000 population right now. And over the last 12 months, it's had an 11.6% increase in rent, only 5.4% vacancy, 6% unemployment. So it's just a strong market in general. Something that you might know about Killeen is Fort Hood. So Fort Hood is the largest active duty base of the U.S. Army. It employs nearly 60,000 people. And the most exciting thing about that for us is the U.S. government is investing $1.65 billion over the next 10 years. It's a 10-year initiative to dump investment into Fort Hood, and Killeen is mostly going to be benefiting from the economic impact of that. Killeen's also getting other grants. the airports, the local Killeen airports, they just received a $6.5 million grant from the Department of Transportation. Texas A&M, $6.9 million in cybersecurity research funding grant. And then you look at the other industry around, there's Advent Health Central Texas, there's 1,300 employees there. Central Texas College, 1,360 employees. Texas A&M, Central Texas, 200 employees. And so great industry, really great investment coming from the government. And you can think what you want about the government, but the thing that they are good at is writing checks. They love to write checks and spend money. And that's great in the case of boosting the economy of Killeen. Not so great for a lot of different reasons, but we like Killeen because of it.
That's right. Well said, Jacob. This property is just a sturdy concrete steel build. It's awesome. 1984. So I was close. I said 83. I think 1 year off. 132 units, 3 elevators, concrete steel structure. Originally a Hilton. It is interior corridor, 6 stories high. And it does include an outdoor pool. It's got a fitness room. I have walked the property. It's very well constructed, built honestly, appropriately for a military town. It feels like a bunker when you're inside. It does have a conference center or event center, which the current setup or the previous setup, they called it a ballroom. So it's large. It's got beautiful tile in it. Not that actually doesn't need a whole lot of touch-ups. It's a really nice event space. It includes a restaurant with a long-term tenant, and this tenant has been there since, I believe, 2016, paying $9,000 a month, and he wants more updates made to the property, and he's willing to pay more, and we'll obviously work with him on that. But I mean, he's a really high-paying tenant for the square footage that he's leveraging, and the food is really good too, serving up some Indian food.
Yep. So the investor returns on this, we kind of touched on this at the beginning of the presentation, but conservatively, we're targeting an 18.3% IRR, a 14.5% annual rate of return, a 1.72% or 1.72x equity multiple, and then it's a 36-month refinance and a 60-month sale. We're getting excellent seller finance terms on this deal. We'll go through it a little bit later. And we're actually negotiating an even lower interest rate. And so we'll keep you updated on that. But it's looking like we're going to get below a 3% interest rate on it. So we will keep you posted. All of these slides, this is a lot to digest, but they're going to be on our offering memorandum. We'll send you a link. You can download the offering memorandum. You can download the pro forma. You can even make edits to the pro forma. You can manipulate it. And so you'll have a link to visit our website and download everything. But an example, $100,000 investment, you put in $100,000. At the end of the project, you get back your $100,000 plus $72,395. Just based on our projections, that would be the theoretical investment return. Investor returns. For this project, we're offering an 8% preferred return to investors. And then after that, investors immediately get 80% of all the profits, 80-20 split to the investor. Then we do have a hurdle to incentivize our team to hit a 20% IRR. And once we do hit a 20% IRR, then the profit split will switch from 80-20 to 70-30 to the investor. And we have 3 fees in this deal. There's a project management fee of 2.9% of the size of the project, an acquisition fee of 1.8%, and an asset management fee of 0.8%. And this slide is really interesting. This is a sensitivity analysis, and it goes through what's the worst case scenario, what is the expected scenario, and what would be a really great outcome in our mind. And so expected, this is still pretty conservative. Rents are close to market rate. Losses means vacancies. It means also turnover. It also means uncollected rents and bad debt. And so in that expected performance column, we're expecting losses of close to 20% and a cap rate, an exit cap rate at 8%. And then you look at our poor performance. This is rents below market, 10% market, 10% below market. losses of 24% and a cap rate of 8.5%. And so everything's working against us on the poor performance or the worst case scenario. Rents are lower, higher losses, higher vacancy, higher cap rate, lower exit price, and still, we're not too bad of shape after that. And then exceptional performance. And just based on the way that Killeen is growing, the investment that it's receiving, and what we're seeing there, I would hope and really strive for this exceptional performance column. And the IRR in this case would be 33%, equity multiple of 2.4 almost, annual rate of return of almost 28%. And this is if the rents are elevated 10% above market, if the losses are reduced from 19% to 10%, and if the exit cap rate is 7.5%. And so again, you'll get this presentation, you'll get the spreadsheet, and you can kind of play around with it. But this is the whole range of what we can see during this investment.
Awesome. I wanted to just give you kudos because I think a lot of investors out there that are live watching this really enjoy the sensitivity structure where you could see, hey, at best case, this is what I'm expecting. At worst case, this is what I'm expecting. So it's really transparent, very honest. And I appreciate that, Jacob. Acquisition terms. This is an awesome, awesome deal. We're buying this at $25,000 a door. And which I'll just give you kind of an idea. Multifamilies trading at anywhere from, 110 to 150,000 bucks a door in this market, and we are a smaller footprint. We are smaller square footage. So for us to be picking up at 25K a door is actually steeply, extremely discounted. The total project size is $8.5 million. And it's a seller finance debt that we were able to structure with the seller, which this is just unreal. I believe the down is hovering at around 13%, if I'm calculating it correctly. He's willing to finance the rest. And then we just come in with the equity for all the renovations. Equity raise is $5.5 million, and we're closing pretty quickly. And the reason why we're closing quickly is because the seller gave us such sweet terms, said, hey, there's no bank contingency. There's no need for a long drawn out process. And this is what I need. This is what I want. I'm willing to give you something at an interest rate below 4%. So anyways, we obliged, and that's what we were able to structure. So pretty sweet deal.
Yep. And just to add one more thing here, there are no payments for the first 12 months of this project. And so
That's right.
That takes the boot off our neck, so to speak, where there's literally no debt obligation for the first 12 months of this project, no interest, no principal payments.
Some people wonder how we're able to lock up these deals. And again, I just want to reiterate, we are very low pressure, highly conservative deal makers. We don't want to put anyone at risk. And that's why we vet hundreds of deals until we find the one that actually works. And this one just is just a home run. Rental strategy is going to be a little bit different than other deals because this is totally vacant. There are no tenants here other than the restaurateur, who again is paying $9,000 a month. So it is taking care of that monthly payment, or it's aiding in that monthly expense. We're going to begin defining the costing and submit the plans to the city. City is already on call with us. We've been chatting with the city. The guy at the city's name is David Hermosillo, awesome planner, executive planning and zoning member of Killeen City Council, and he is willing to work with us. They are amicable in us turning this property around into something that their locals and their residents can use for much needed housing. The plumbing and electrical is going to be probably the heaviest piece of this construction project. The good news is we did send our GC team out there, and this was a very heavily built property back in the 80s. So whether it be that we were going to add additional appliances, it's really heavily built, and the amps and the load for this property is enough. It's actually ample. So we're not going to need to go and pump a ton of amps or add a switch gear or wait 10 months for additional electrical. It's actually satisfactory. We're going to install internet. We're going to refurbish the elevators. Right now, there's no internet installations at all. We're going to put in some Cat6 cables, really deck it out for high-speed internet. Pool and gym are in pretty sweet condition. We're just going to touch those up, and we're going to add our signature countertops and cabinets. If you've ever seen any of our previous deals, if you were here earlier in this webinar, you would have seen the video of the McAllen 29 unit, where we had really beautiful soft close cabinets, stone engineered countertops, and it's just got a very just an opulent feel for the resident. And we're looking at a 13 to 16 month turnaround time. It could be much quicker, but we're being very conservative. Here's some more slides showing what we're going to do in every quarter of 2024 and 2025. But by the end of 2025, we should be just about wrapped up and set up for leasing. Pretty exciting to get our certificate of occupancy at the end of next year and fill out floors 2 through 4 with tenants and residents.
Yeah, so the leasing strategy, we do have an internal property management team that we at Motel to Apartment Conversions, and so we'll be using them, and it's a combination of on-site leasing agents and also virtual property managers. We use AppFolio as our property management system, if you guys are familiar with that. And having somebody on site is going to be critical for this size of a property. And so that's a relatively low cost of staff we've found in one of our other projects for Brownsville, Texas. It really hasn't been a huge expense burden. And so we will have that on-site staff for this property. And then in terms of listings, we will list this on rental websites. Now these will be long-term rentals. We will list it on apartments.com, Zillow. And then what we're doing right now is we're also supplementing as we're doing the lease up process with Airbnb and VRBO, so that we can kind of do a hybrid until we're all the way leased up. For our McAllen property, we're actually getting bids right now, and it will qualify for a Fannie Freddie loan on the back end on the refinance. And so we're really excited about that. And that's the power of converting hospitality into multifamily, is that a lender loves to see a stabilized multifamily property as opposed to a hotel that fluctuates in income and vacancy, etc. So in this area, as we kind of went through already, there's a high demand for all-inclusivity. We have a large Army base, a lot of new industry coming, a lot of students coming. And so we're marketing to individuals that would like a nice place to stay at an affordable price point. And so you can see our occupancy indicator here that by month 18, end of year 2, we hope to be fully stabilized with this property. And our exit strategy, again, stabilized by month 18, refinance month 36. Cash flow from the time we stabilize until we sell the property. And we'll sell the property, we plan to do that month 60 or sooner. There are some large Killeen multifamily buyers that we obviously would reach out to. So that's RREAF Holdings, Turner Brothers Real Estate. And then we're continuing to do more due diligence on other large Killeen multifamily buyers. But this is the general timeline for exit strategy. And we are getting conceptual mock-ups for this property. This is our last project that we finished. It's called Studios on 4th. This is obviously the video that we watched earlier in the presentation. And we plan to have it look similar to this with the finishings, the nice open apartment, actual apartment feel layout. And so this is not low-income housing. This attracts very good quality tenants. And that's kind of our style. We don't go for the cheapest. It's nice housing for people who are going to be good tenants. And then the pro forma, I won't go through all of this just because it's a lot, but again, you'll have the link and you can download the pro forma. Total project size is 8.5, almost 8.6 million. after all the acquisition costs, renovation costs, reserves, any fees. Our capital stack, like Andrew mentioned, it'll be a $3 million loan from the seller. Right now it's at 6% interest, but it's looking like we're going to get it to under 3% interest. And then the capital raise on this is about 5.6 million, just a little under 5.6 million for equity. Our disposition, you can see here, we're underwriting it a conservative 8% cap rate, and it'll be a $95,000 a door exit. And there's some great rental comps in the area.
Yeah, the rental comps are wild. This property, for example, Station 42 is right next door, and these comps are furnished. So we tried to look for comparables that actually look like comparables, and this one is rented out for $1,474 high occupancy per month. As you could tell, our conservative estimate is lower, but we see the possibilities here. This one's nearby, Arbors of Killeen. These are leased out, and they are standard furnished at $1,500 or over $1,500 a month. The estate or Eastgate Ridge apartments are just over $1,000 a month. And these are, if you notice, for the in that back one, in that last one, they're not totally renovated. You know, you have some that are not totally renovated that still need work, that kind of look like they're dated. They probably don't have all the features that we would have or amenities, and they're still clearing over $1,000 a month. Brickstone Villas, just a nice, clean remodel. Looks like they just really worked on the flooring and the paint and trim. Again, not all the bells and whistles that we put into the property, and they're at $1,400 a month.
Yeah, and just one more comment on this one. We gave him a call, and there's only one furnished unit available, and there's only 10 units available in the entire building out of 222 units. And so they have a mix of furnished and non-furnished, but which is under, it's under 5% vacancy. It's like 4.5% vacancy. So pretty amazing.
Yeah, the furnished rental comps are pretty impressive. If you look at the green box, that's where we're going to stay in that projected $1,100 range. It doesn't mean we can't go higher. Definitely, very well could, and most likely will. But we're going to stay conservative in that 1,100 range. The market there is getting $1,300 or more. It's just wild what they're able to yield in Killeen, Texas.
So that's our presentation for today, and we'll make it available to everybody. There's been a QR code that has been shown on all the slides. If you want to scan that with your phone, it will take you to a form. You can see the Let's Connect form. And that form will ask you some information about yourself, if you're interested in investing in any of our projects, and this one specifically, how much you'd be looking to invest, if you're an accredited investor, how soon you'd like to invest. And so if you do have interest, the legal docs for this property are all but done. We're just getting a final review from our legal team. But the private placement memorandum it's constructed. It's not quite available, but it's going through a final round of reviews, so it should be ready next week at the latest. And we will be able to share that PPM. We'll share the offering memorandum, the subscription docs, everything like that. And the close date on this property, relatively quick close. It'll be April 15th. The reason that we're able to close that quickly is because, like Andrew said, we only have to bring around 10% to the table to close on the property. The equity raise is $5.6 million on this property. And we're targeting, again, a 36-month refinance, 60-month sale. It's for accredited investors. And just to remind you of the projected returns, it's 18% IRR, 1.72 equity multiple, and 14.5% annual rate of return. Okay, so if we have any questions, you could post them in the chat here. Okay, so we have one from Brandon. Great question, Brandon. These are all 500 to 800 square foot comps. How big are the rooms in your conversion? How will the per room cost go up and down? Great question. So there are a handful of one bed, one baths in this apartment in the hotel that we're acquiring. What percentage of the rooms are one bed, one baths? Andrew, I think it's under 10%. Right.
Yeah. Yeah. It's a pretty low. It's a pretty low
Yeah.
amount. The rest are
Yeah. And so those are, those will be about 700, almost 700 square feet. And then our studios are in the mid 300 square feet range. And so it's a great point you bring up, Brandon. These are all 500 to, I think maybe 700 high end. And that's why we are factoring in a slightly lower rent of closer to 1,100 as opposed to that 1,400 number.
Great question. Matt just asked a question, and by the way, Matt, it's so good to see you. We had dinner the other day or lunch the other day at Green Corner, which was awesome. So it's good to connect with you, Matt. Why wait 5 years to sell if it's stabilized? I believe in 3 years. Yeah, we do too. That's just a projection. It very well could be 3 years or less. I believe it's the way we have it set up is 3 years refinance or sell, but we have the 5 year period. So we have a 5 year window in the event that we want to take up 5 years to sell. And that could be because we have just outstanding performance on the lease or the yields, right? The yields could be just wild and we'll have that time. But it's pretty probable that it could be that 36-month. Great question, Matt. And good chatting with you, Matt. We need to link up here again soon. So I spoke with some y'all yesterday. It's so good to see you. I just wanted to say hi to you, Dave. Good to see you. Sunil, I spoke with you. Good to see you. Scott, good to see you. And we have some new guys that I maybe have spoke to before. Maybe I haven't talked to in a long time. Dave just asked a question. Sorry. Go ahead. You want to take that one, Jacob?
Sure. Any ancillary income streams? So the restaurant, obviously $9,000 a month is excellent. So we'll continue to run it that way. And then also, just like in our other apartments, we'll have washer dryers. We don't factor that into our pro forma actually. So that can only help, but we don't expect much out of it. Probably $1,000 to $1,500 profit a month, which adds up. But other than the restaurant and the laundry services, those are the ancillary other income streams. Does the restaurant take up the large building? So Andrew's been on site a couple times. Is that right, Andrew? That's the large building.
The building in front, yes, close to Central. That building is the restaurant. That is correct. And then there's a large event center. Again, this is we'll have permits to leverage these areas for income for commercial use. So the large event center could be leased, could be a place where corporate gatherings can be taken place. Killeen is kind of building its, I'd say its presence in the corporate world, where you do have that hospital build out. You do have new businesses kind of showing up to the party, even not in just Killeen, but in the areas around it. Austin's just a hop, skip, and a jump away. So there are other streams of potential income chalked into the laundry, the event space, so on and so forth. Great question.
Yeah. And then why 18 months after stabilization to refi? So great question. So you stabilize month 18, and then why are we waiting another 18 months to refinance? Why don't we just refinance month 18 or month 24? And that's possible. We'll see how the debt markets are doing then. But the fact that we're getting this at such a low interest rate from the seller, again, he has committed to 6%, but it's very possible we're going to know after really in the next day or so. It's very possible we will get an under 3% interest rate on the carry that he's going to give us. And so with debt like that, I mean, it's almost free money. and so we'll see how the debt markets are looking, and maybe it does make sense, to your point, Dave, that we do refinance month 18 or month 24 if it's looking really good. But with debt that cheap from the seller, no personal guarantees, no bank approval process, very low risk. That's the reason why we're projecting a 36-month refinance. And then the funds. So Dave, do you mean the investment, the the investment funds that we're raising or the funds to the seller. I'll just explain both. And so we're going to send out, so for our raise, the $5.6 million raise, we're going to send out the PPM and subscription agreements early next week, ideally. And the time to fund, close date is April 15th. Oh, yes, investment, got it. So close date is April 15th. So really within the next, I would say 2 to 3 weeks, we would like to have capital calls out. And then after a capital call is sent out, it's usually a week or two. We can be flexible, but ideally having all that capital raised within the next 2 to 3 weeks, having capital calls out would be ideal for this property. So hopefully that gives you enough time to do your due diligence and put everything in order to review the PPM and be able to make that commitment.
I just wanted to dance on that thought real quick that or not thought, the actual statement that you made, just so it's kind of clear, shedding a little more light on the possible contract or renegotiation that we're about to see here in the next day or so. Sub 3% interest rate. And by the way, this is interest only. This is a very low payment. Sub 3%. In any case, if you're making if you have a loan without a personal guarantee attached, no recourse, under 3%, and you're allowed to do construction, you're going to hold tight to that loan. That doesn't exist. I don't care if you're in the private world. I don't care if you're in the the banking world. It doesn't exist. That's a pretty remarkable and really just a home run of an opportunity. So that's what we're dealing with here. Extremely low risk. Nothing's risk free. Risks are everywhere, and our PPM will outline those. So we're very careful with what we say because we're not going to misguide you. But if we can improve your odds, improve everyone's odds of not only getting the original cash back, but really making your capital work for you at a quicker rate, I mean, that's what it's all about.
Right.
I would never refi. Yeah, right, Matt. I think you and I are on the same page, man.
Yeah, and that's why the residential market kind of sucks for buyers right now, is because everyone locked in those low rates and they're just sitting on them, don't want to sell. So yeah, it's I'm the same way, Matt, for sure.
Matt, you're in Gilbert. I'm in Chandler. Let's link up soon. Shoot me a text. We'll go grab some hummus and some baba ganoush, and we'll talk rates and deals. And man, I gotta deep dive this deal with you. It's awesome. Real exciting.
Yep. So if you haven't already, we've had multiple people, even on this webinar, fill out this form and give a soft commitment. If you haven't, feel free to scan the code or go to our website and fill out the form. And then once you fill that out, or just email us directly, info@motels2apartments.com. You can text, I think that's Andrew's direct number. You could text Andrew, call Andrew. And that way we'll have an idea of what you want to invest, the timeline that you're looking to invest. And then we will send you the private placement memorandum subscription agreements for you guys to see.
So see this is my iPhone. This is not a CRM. This is that number on the screen goes straight to my cell. If you call the number, if I answer, you'll hear me. But send me a text. This is not a computer. I'm not AI. As much as I want to be AI some days, we'd like to hop on the phone with you and really get to know you. I think I know most of you here. If we don't know each other, let's get online. Let's talk. I think most of investing into any investments, really investing in the operator, knowing who they are, knowing their values, knowing where they come from, knowing what their true goals are.
Awesome. Yeah. Okay. Well, any other questions, please feel free to email us, text Andrew, blow him up during the middle of the night. He said he doesn't care. So
2 a.m.
Take him up on it.
Call me up.
Great. And thank you guys for your time attending today. And we look forward to working with you all and sending out all the information that we have as it comes along. So thank you guys. Appreciate it.
Sounds good, guys. Hey, we're excited to have you. Thank you, and we'll talk soon.
Okay.